Hello, everyone, and welcome back. This is the continuation of our breakdown of the global economic risk map, and today we're moving on to the next major territories. Right alongside the high-risk zones lies the space of active restructuring, the battle for capital, where countries are fiercely competing to redefine their place in the new global order. This is where the future centers of economic gravity are being decided right now. Take the United States and the major economies of East Asia, which are currently locked in fierce competition for investments, technology, and supply chains. The U.S. occupies a unique position here. The American economy continues to act as a primary magnet for global capital due to its deep financial markets, unparalleled technological edge, and reliable regulatory framework. Amid global turbulence, investors view this environment as a critical safe haven. Furthermore, the country is currently undergoing an aggressive domestic industrial retooling, betting big on next-generation sectors and nearshoring production, which reinforces its long-term resilience. In Asia, the picture is more complex. The region's largest economies are locked in competition, rewriting their domestic growth models. Supply chains are shifting, companies are diversifying their manufacturing footprints, and states are racing for tech supremacy. For capital, this represents an intersection of massive growth potential balanced against sharp risks. Strategic economic blocs also play a huge role in this zone. Countries are proactively diversifying their trade partnerships to reduce reliance on single markets and make their economies more agile. Where these efforts succeed, investor confidence steadily solidifies. The global economy is not moving toward a single center. It is being redrawn. Capital is closely watching which states adapt fastest, because that is where tomorrow's growth hubs are being formed. If the restructuring zone shows us where the future is being fought, the zone of relative safety shows us where capital goes to hide. In moments of global anxiety, rapid growth becomes secondary to stability and capital preservation. The hallmark of these economies is institutional integrity and clear, stable rules. I'm talking about countries where property rights are unconditionally protected and the judiciary is genuinely independent. In these economies, money feels secure and investors are fully willing to accept modest growth rates if they are absolutely certain their assets are legally protected. In a turbulent world, that protection is often worth far more than high returns. We also have to mention the unique role of major global financial hubs. They act as safety valves through which a massive portion of global capital flows. Their sophisticated banking infrastructure, transparent regulatory frameworks, and deep-seated institutional trust turn them into natural economic sanctuaries. Even when external volatility spikes, these centers remain relatively calm. However, safety is never permanent or guaranteed. It relies entirely on continued trust in a nation's institutions and its ability to maintain order. The moment that trust wavers, capital flees. Because of this, the competition to maintain a reputable, safe haven jurisdiction is fiercer than ever. Ultimately, money concentrates where stable rules, advanced infrastructure, and long-term predictability intersect. In the new economic reality, these spaces become the anchor points of the global financial system. How will this map evolve over the next few years? We are looking at a critical testing period for the global economy, likely tracking along one of three paths. The first scenario is cautious stabilization, where major economies successfully adapt to the new status quo. Energy and financial pressures ease, geopolitical conflicts remain contained, and international trade ties are partially repaired. Capital continues to flow toward resilient systems smoothly, without jarring shocks. The world remains complex, but manageable. The second scenario is prolonged regional turbulence, where localized flashpoints intensify and spill over into the broader global economy. Market volatility spikes, investor anxiety deepens, and capital flight becomes erratic. The zones of relative safety shrink, forcing governments to burn through domestic resources just to maintain basic internal stability. The third scenario involves an accelerated global restructuring, where technological breakthroughs and supply chain overhauls happen much faster than anticipated. New economic giants emerge rapidly, and the global balance of power shifts decisively toward the most agile, adaptable economies. Capital undergoes a massive, aggressive reallocation as investors chase both safety and ground floor opportunities. Which of these paths we actually take depends heavily on how well world leaders manage risks and negotiate with one another. But across all three scenarios, the core trend remains identical. Capital will ruthlessly prioritize resilience, predictability, and adaptability. These are the exact forces that will dictate the economic map of tomorrow. To wrap it all up, we are entering an era where economic resilience is taking center stage. In previous decades, the ultimate metric of success was how fast an economy could expand. Today, the focus has shifted to how well an economy can take a hit. Money is increasingly choosing the most stable systems over the fastest-growing ones. The new map of economic risk proves that capital responds above all to institutional quality and predictability. Where the rules are transparent and long-term policies remain consistent, trust follows. And in the modern global economy, trust is the ultimate resource. It is what attracts investment and builds the foundation for stable growth. That's all for today. Thank you for watching, take care of yourselves, and I'll see you next time.